Greetings while we get everything set up. Make sure the sound is on. All right, if I can have someone tap in, it looks like we have a couple people that have already joined. If you can go ahead and tap in and let me know that the sound quality is okay. Okay, sounds good. Sounds good. Let's get it. Let's get it. I hope everyone is. I was going to say, what is today? I think today is Tuesday. All right, so we're at Tuesday, and the markets are marketing, and also the charts are looking pretty good. So if you weren't aware right now, let me just pull up the date so we can talk through this. We're doing I like to call it a world tour. We're doing a finance tour, and we've had the pleasure of hitting up a few cities so far. And during that time, the normal live schedule, the 12:30 Central Time, was not going to work consistently because of the dates that we had coming up. And so we will resume the live at that time. Right now, though, one of the more quote unquote pressing things that I wanted to bring is the update on the GBPUSD trade. And if you're in Scottsdale, we added a stop to Scottsdale. So if you're in Scottsdale and you'd like to connect with me, definitely send us an email. Would love to meet you. We already are pretty. I don't want to speak unintelligently, so just send me an email. We'll get you some information on the meetup date, and then we can go from there to make sure that you are connected. We've been doing private meetups around the country to help traders develop their skills and mindset, and also just give them some tools to help along the way. Okay, okay. So, yes, here we are. Today is the 11th of March, I believe. Yep, Tuesday, March the 11th. It's approximately 12:05 p.m. and I am I don't wanna say Mountain Standard Time because I know in Scottsdale, Arizona, like, the daylight savings time doesn't really mean anything to them, so it's always awkward to get that changed. Let's talk about swing trading. Let's talk about it, and this live is gonna be about the trade that we've held for 50 days. It's been I looked up and I said, "Well, it looks to be completing this idea, so we'll go ahead and go live." And you don't have to take my word for this trading idea that you see on your screen. You can go back to the live from the 20th January, and we were talking about this trading idea being the direction that we wanted to go. And I want to take the moment to talk through how I qualified this idea. And a lot of the members with the Billionaire Trading Club were able to participate and have sent me updates on trades that they've taken throughout this time. And keep in mind, I mean, you don't have to quote unquote swing it. I mean, while you're swinging it, you get out to the world is yours. It's an unlimited opportunity. Main thing is just going over the psychological conversation, if you will, of holding a trade for that amount of time. The tendency we have to want to get out of the trade. That's something. Let me back up because I don't want to assume that you know what swing trading means. Okay. So with swing trading, the goal is to take your trade from I like to call it a pivot point to a next pivot point. And to do that, we're looking at psychological price levels, aka the quarters theory. And for this particular trade, this is GBPUSD, we were using the 1.2 to 1.3 major large quarter points. Now I'm going to give you a brief lesson on the quarter theory. That the premise of the quarter theory is that the market has a tendency to move in 1,000 pip ranges. Okay, and so these black lines on your screen, if you're looking at the trading view chart, that represents 1,000 pips. Okay, now with quarter theory, you can break down the trade into quarters, aka 250 pips. So that's what these orange lines represent. 250 pips here. This is the major half point, and this is the large quarter point. So when you think about a dollar, I like to use the example of a dollar. Most people can relate to how quarters split up in a dollar. So we have 4 quarters in a dollar. We have our dollar here plus 25 cents plus 25 cents, so that makes 50 cents. Cents from here to here. Oh, let me go back. I must have hit the wrong one. 50 cents from the halfway mark to the other way. Go. So from here to here, we got a 50% run and then 250 pips, if you will. I like to use the dollars because it makes it a lot easier to understand that theory. One of the things that the quarter theory helped me to do was to have realistic expectations of the market and to also strategically plan my profit taking. Before, and I've been teaching, studying the quarter theory for maybe about 2018. Before having that as a part of the way that I see the market, unfortunately, I would let trades just run. And so some of those trades would either just be completely wrong, or it would be where I held onto a trade too long, not understanding the market dynamics, and the market will reverse. So with the quarter theory, not only does it help you to spot those quote unquote huge or large moves, but it also helps you to strategically take profit, which was another thing. I know I had a video years ago where we were talking about psychological analysis. People don't know when to take profit. They're afraid to take profit, right? So it helps you with that. That's what it helps me with. And that's why I wanted to bring it to our community of traders because, hey, think about it. I see people that are on this 5 to day journey, which is fine, no judgment there. Except my whole thing with getting into trading, because I started trading when I was working full time, I didn't have the luxury of staring at charts all day. Okay. So there had to be a way for me to trade with basically hands off, aka waking up and profit. I didn't see myself replacing my job with trading. That wasn't the style of trading that I prefer. To each their own. Some people like getting up at the butt crack of dawn and yeah, looking at their charts all day. That's not my jam. I like to work out. I like to read. I like to watch lectures. I like to watch documentaries. I love sci-fi movies. I love outdoors activities. I train a lot, and so my lifestyle dictates my trading. My trading doesn't dictate my lifestyle. Now, eh, granted, I can teach people how to day trade, if you will, where you're entering trades throughout the day or tomorrow, or I can certainly teach that. And I've been teaching that successfully for years. My primary bread and butter is swing trading, setting and forgetting. And so again, you can go back to the live that we did on the 20th of January. And then so in there, just along the way, we did catch a sell here. We caught a sell here. We talked about how it looked to be a bit of an M formation, but it stopped at the peak and reversed, right? So we can use the line chart to see that was it kind of favoring an M, and then once it got to this peak here, over here, it reversed. It went higher. Okay. I want to just talk through this trade because early on this day was that February. Yeah, so this day was definitely not a fun day as far as so some brokers when you this is a forex.com chart, some brokers will show that the market like gapped down here. And so when I say it wasn't a fun day, it just means that like when we entered here originally on the 20th to be to take this first leg of this 250 pips, and then this day here basically kind of pulled back tremendously, and then came right back up. And notice, notice these levels. Don't miss it. This is not a coincidence that the market turned around at this 1.25 level. Does it always do that? Sheesh. I mean, one, two, three. How many confirmations do we need? Okay. So the market rejected here and above here, closed below here, fell from there. And then if you would have sold off here, you could have taken it back down technically to the major large quarter point of 1.25. And so that being said, for the swingers are also looking at the long direction, this could have been a re-entry. But this wasn't my favorite day, and I think I made a video about that. And I was just talking about how this that's why it's also important when you're doing your trade planning that you're not just randomly picking a broker here. This needs to line up with the broker that you're using. And 9 times out of 10, if you're not using a regulated broker like Owanda or Forex.com, then your chart is not going to technically match up with your platform. So, just a piece of wisdom from my experience. And let me see, I'll just quickly switch to, it's not going to be on the Owanda chart because that one is, oh, yeah, it is on the Owanda chart, actually. You can see here where it gapped down. And so, since my live account is with Owanda, this was, man, it just wasn't, it was like, nah, but you have those days when you're in a trade, and it's not always, it's it's not that it's not fun. It's just like I think equate it to sports. When you know you're down, let's say you're down in the first quarter, right? You're down in the first quarter by 10 points. Yes, there's still time on the clock. You would have preferred to get up. You would prefer to be up by 10 points in the first quarter, right? So just that idea of trade developing itself. One second. One second. I want to make sure we are good to go here. Let's see here. Is it try this real quick? One moment. We have to make sure we are connected. Can you still hear me okay? Does it sound still? I always, I'm always hesitant about saying, "Can you hear me okay?" Because if you cannot, then don't say yes. Okay, let me see. Let me see. Let me see. Let me go to. Okay. All right. So it sounds like we're good to go there. I just wanted to make sure. And getting back to the point, so it's kind of like being down in the first quarter, and then it turns around, and this was a very bullish day, right? The market did come back down. It looks like it filled up midway through this week and then decided to reverse. The point that I was making, though, is pay attention to these levels. The market rejected from here, came back and pretty much did the same thing, touched the level here, barely closed above it, made a higher high from here. And so this probably is where some traders were thinking, oh, if it breaks this high, breakout traders, if it breaks this high, I'm going to get in. What did the market do? It broke the high and then it turned around to take the money from those traders. So the same psychological challenges that are on the 5 minute are on the daily. The same psychological challenges that are on the 15 minute are on the daily. It's just the daily does require more discipline and more patience. And so once this day reversed here, we added to this position. And I mean, to be transparent, I've taken so many trades throughout this while holding this one trade in the background. And that's a little bit of what I want to talk about is just the strategy of not only having that one account that is more like a wealth building account, you can trade for an income, right? And so if I'm trading for an income, then I'm looking to grab these 250 pip moves. Okay, so 250 pips here. So that would have taken technically 1, 2, 3, 4 days. Okay, 4 days, 250 pips versus someone that is, let's just say they go up 30 pips today. Now they're down 40 pips tomorrow. So they're plus 10, negative 10. Now they're up 100, right? So now they're plus 90, but then they're trading every single day. This is 4 days up. And so I'm not here to convince you that swing trading is the way to go. However, when you look at the chart, the candlesticks are similar, right? I mean, it doesn't, you could take the time off and just really just start to pay attention to psychological price levels and see how the market just does what it wants. It does what it wants and it'll continue to do that. But at the same time, there is a rhythm to the market and the market isn't quote unquote chaotic, it's organized. But I'd like to equate that to when I spent some time living in Ho Chi Minh City to see the motorbikes come up to what seemed to be an intersection without a, let's just say it didn't have a traditional stoplight like we're used to in America. It would seem chaotic to see hundreds of motorbikes ready to go and then one car in the mix. But there was an organized method to the way that the drivers were operating. They didn't need certain things that we need in America to determine when they should go and when they should not go. And so equating that to the market, if you believe that the market is chaotic, send me an email. You're trading wrong. If you believe that the market is a big, bad, scary place, send me an email. Reach out to us. We have newly released a bundle for courses that traders were needing from our, we study our site analytics, and a lot of traders are looking for help with entries. They're looking for trading psychology. They're looking for mastering, they're looking on how to master market structure and then also just money management. And so we did just release a trading bundle that would be quite advantageous to the trader that's looking to learn how to swing trade with confidence. Let me tell you something. I say this humbly, and I say this humbly, and I mean it. Swing trading gives you a certain confidence. It's not like any other confidence because it teaches you the art of patience and trusting in your vision and trusting in your trading idea and trusting in what you know to be true about the market. And so, is it easy? No. If it were easy, everyone online would be talking about how they held a trade for 50 days or 100 days. And not that 50 days is the grand master of holding trades. It is a substantial point where we were ultimately looking to take advantage of this 1,000 pip range. Did we know it was going to take 50 days? Absolutely not. We don't know. If you've ever heard anybody say, "Oh, I know where the market is going." Hey, what's going on? Yes, yes, yes. What's up? What's up, goat? Hope you're having a good day, my friend. But if you ever are with someone and they're telling you they know exactly where the market is going, they're simply lying to you, my friend. They don't like you. And they just want to take your money. Let's just be real. They don't want to actually help you. Nobody knows. We don't know. If the market pops off and continues to shoot up, I don't know when it's going to do that. I don't have a crystal ball. The way of seeing the market that we train our members on is just looking at the big picture and using these levels to our benefit so that we're setting ourselves up for success so that we don't have to trade all the time. Come on, like literally, I've been, I the schedule is so tight to even count the number of states that we've been to within the last 2 weeks. It's at least 10. And so, would I be able to help people in that way and still manage trade? Sure, I'm sure I would, but think about the ease of holding a trade, knowing in the background when you wake up tomorrow that, hey, okay, we're still in profit, profit's growing. One of the hardest things to do is to sit on your hands. Even now, this market is super close to the 1.3 mark. And typically, what I'll do is once it gets just shy of that psychological price level, we would look to take profits because we're not looking to squeeze every bit of the trade or to be greedy. We want to be conservative and take the profits that are being offered. And so the plan is more or less to take profits around the 1.2975 area. If it hits it, depending on how the day closes, that's going to ultimately determine the direction. Okay. So that'll the direction of the trade is what I'm saying. So right now, let's talk through a couple more days because after this broke out of this 250 pip range, notice how the market just stayed in this 250 pip range. We didn't have a retrace back down. Okay. And so when you get some strong, first of all, this candle here breaking into this, now this is a true breakout, right? This is more of a fake out. I sound like a rapper. This is a fake out, but this is a breakout. Okay. So what do I mean by that? Well, this candle did make a higher high. However, it pulled back to be almost in line with the previous high. This candle, the body, okay, open lower than both of these candles, lower than this wick here, a little bit above this wick, and then it completely demolished this high and this high. And so studying the quarters theory, we have a playlist on the YouTube channel where you can start learning all about the quarters theory. It's a free playlist, so make sure you spend some time doing that. And also with our 21-day backtesting challenge today is, if I'm not mistaken, today is the day of quarters theory that we're talking about breaking that down. But just paying attention to the candles, that's all you need. I understand that naked charting makes some people afraid to look at a chart like this without any sort of indicators. It's like, how do you know what you're looking at? But I trust me, I teach people how to do this every single day. It's just shifting your mindset around why you're trading and what you're looking for. I don't teach people how to see the market from my point of view. I teach people how to see it from their own point of view. If we look at the true definition of the word educate, it means to draw out, meaning you are the secret sauce. You already have the knowledge in you. And my gift and talent to the world, or my gift to the world, is being able to bring that out. And so just in a simple conversation, like saying, hey, pay attention to how this candle that broke into this next 250 pip range, pay attention to that candle, because the previous candles that breached this level rejected, and then the direct next candle fell, right? So two times where we had the market kind of peak in here and then reject. And so now when we have a candle that is very boasty and the body, it's like half of the body closed into this new 250 pip range. So that gives a trader that is familiar with psychological price levels or the quarter series, that gives you the confidence to know, okay, so now we've completed this 250 pip range. Now we're in a new 250 pip range, and we're just going to watch to see how the market approaches this one. Now, granted, to break out of this 250 pip range, we were in that from January to technically February, almost a full month, right? To go from this 250 pip range to this one, right, 1.275, we were there from the 13th of February, basically until the 4th. Okay, so even in that time, there were a couple buys, and typically once we have this going, I'm less likely to enter a sell, right? So this right here could have tricked some people like, oh, this is an engulfing candle, but it's not at a psychological price level. In fact, it's at a level where this, for some people, they might consider this to be some sort of supply just based on this candle. But this is also helping you to not get faked out by candlesticks that have conflicting meaning. So someone could have come to the chart and say, "Oh, well, I know that's going down," and guess what? It justified it just a little bit for it to set up. Like, this is not a coincidence, right? This is not a coincidence. Set up on basically this same level, and then in theory gave you a similar pattern, right? Where there was a candle that engulfed the the previous candle. And so even this candle giving you extra confidence and saying, okay, this is going to continue to this 1.275 area. I don't have the chat up just in case, guys. So if you're dropping comments, I know GOAT was, I saw that, but if just in case to let you all know, back to the trade, when this candle here engulfed, then that gives you even more confidence to say, well, we're probably going to complete this 250 pip range. And then here we go with this month, March, we're only 7 days, and I'm counting the calendar days with this trade. We're only 7 days into the calendar day, and even similar with the way that this candle closed, it was almost halfway through the body. I mean, we can get really technical and measure it out. Let's just see here. It's 123-ish. Yeah, so a little under halfway, or half of that candle's body closed above that level. And so when you have psychological indicators from your, not only from the levels, but the candlesticks, when you have what are called the technicals, the Western technicals and the Eastern technicals, or when you have the, how do I like to say, the mental side, okay, psychological side, and then the trading side, the technical trading side matching up, that's when it's go time. All right. And so not hesitating on pulling the trigger and not hesitating on holding the trade, because to maximize your profits, why not? Why not hold this trade and keep going and allow the market to do what it's going to do, right? Why would we cut off our profits? And so here we are on this day, and we could get another candle to let us know. But this is what the reason I wanted to make this video today as well is the same things that are happening right now in the current 1,000 pip range that we're in. All we're going to do, secret, if you're listening, I'm going to whisper this. I'm just going to do the same thing. Okay. I'm going to see how the market responds to that the new 1,000 pip range. Okay. So if we were to break above this 1.3 level, that means that we're in a new 1,000 pip range. Okay. And so let's just say, and let me use the candlesticks for this so we can make this illustration. Let's just say we had a candle that tomorrow, and it just to make sure you can see it on the screen, we'll just keep it yellow. So let's just say we have a candle that closes in that fashion. Okay. Are we automatically jumping in? Not necessarily. The best entry would be as close to the psychological price level as possible. But with that being said, it depends on how the market reacts, because you could have a day where it does that, and then the market could turn around. Oh, that's not good. That's super close to the other one. Let's move that over. Let's just say the market does something like throws up a wick, but the body is, let me change that so you can have the blue color. Let's just say the next day it's something like that, right? So paying attention to each day and the story that each candle tells is what's going to determine if we're going to enter this trade and project out the new 1,000 pips, or if the market is just going to reverse to a familiar level. Now, keep in mind, when we were looking at this trade, and I want to zoom out, we have some psychological price levels in this trade that have not been tested, if you will, right? So I mean, we could see the market fall back to this 1.275 area before re-attempting. Is that that sounds good, like good in English. Attempting to go above that. The market could come up here. It could fall back down to the 0.25, right? But when we're looking at how the market is stair-stepping these levels, this would be an interesting level to watch. Not to mention, look at how the market hung around this level before dropping down, and that was last year, right around the election. Pay attention, traders, right around the election. Okay, think about it. Nothing happens by coincidence. And if the talking heads on the TV, if they're really going to give you solid trading advice, do you think they would put it on the TV? No. No, 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 no. They're not going to put it on the TV. So I said that to say that this level is very, very interesting. And that would be a part of the reason why the strategy is to peel off profits. Now, could I leave it and let it go? Sure, we could do that. In fact, we may peel off a portion or partial profits and let that trade continue to run. However, this is considered a successful trade or trade completed, right? And so this is where you quote unquote celebrate. Not too much where you're partying too hard. I don't drink, so I don't know about that life anymore. Not that I have. I won't. I'll drink champagne, but I stopped drinking probably in 2021. So it's been a while for me. But this is where you celebrate. This is where you go and maybe you treat yourself. Maybe you're like me. You go to the spa, you treat yourself to a facial massage. This is a win, right? Versus not celebrating yourself and just not taking the inventory of where you are in your trading. So this is a good day. I'll say that humbly. This is a good day to have this trade go ahead and complete. And the plan from here is to pay attention to the 1.30 level. And if the market gives us an opportunity to take it to that new 1,000 pip range, we're just going to plan to do the same thing, right? It's like just moving this plan to where it makes sense. I'm just going to move it back to where it was. But yeah, so that's what I have for you. And I certainly appreciate everyone that spent some time today going over this trade. And if you have questions, feel free to send me an email. You can visit our website. If you are looking for strategies and ways to maximize your profits, if you're looking for help with swing trading, look no further, my friend. Okay. The billionairetradingclub.com is going to be your resource. We have very affordable monthly memberships, or if you're looking for more of a targeted skills based training or courses, we have those as well. So head over to our website, look around, find your jam. And again, just to reiterate, we dropped a bundle for traders that are looking to get help with psychology, entries, market structure, and as a bonus, money management. So if you got an aha moment from this video, I would certainly love to hear about it. Be sure to like the video, share it with a friend that can't hold a trade for more than 2 minutes without freaking out. Share this video with that friend that won't even hold a trade for 30 seconds because they're in drawdown. They get scared. And so hopefully we can inspire them to know that whatever you desire, you can accomplish. We just have to figure out what style of trading is going to suit your personality the best. All in, I hope that your day continues to be fantastic. If it wasn't fantastic before now, I hope that it is going forward. I hope you have a prosperous day. And yeah, until the next time, take care and trade safe.